Thank you, Mr. IC. Good morning, True Olgeta. I'm very privileged and humbled to be representing my Commissioner General and the IRC here today. Yes, I'll dive straight into my presentation. As you can see, I'll be presenting on tax registration, compliance, and incentives. So basically, the outline of my presentation, you can see there. Okay, the Internal Revenue Commission, IRC, we are established under the IRC Act of 2014. Previously, we were a government department. As of 2014, we became an authority. So IRC collects about more than 80% of the government's revenue each year. It is headed by the Commissioner General, Mr. Koim, administers the Income Tax Act, the Goods and Services Act, Stamp Duties Act, and the other subsidiary acts, like the Regulations, the Rates Act, and the 11 double tax treaty agreements that we have. And we have offices located in 22 provinces with 4 regional offices in all the 4 regions. Okay, firstly on registration. Sorry, I can't see. For businesses and all that, when you come to do business in PNG, you have to register within 21 days of the commencement of your business. So you register by obtaining a taxpayer identification number, or in short, TIN. For the extractive sectors, where there is a project and all that, each participant in the project has to have a different TIN, a separate TIN. You treat it as if you're a separate company. So every resource project, companies, every project that you participate in, you have to obtain a TIN. GST registration is mandatory for businesses with annual turnover of more than of 250,000 and more. For those below, it's voluntary. For unincorporated companies, you have to incorporate with IPA before applying for a TIN. Okay, the compliance, filing of tax returns, corporate entities. Businesses with financial period ending 31st of December, filing due date is by the 28th of February after end of your financial year. For businesses with substituted accounting period other than 31 December, 2 months after end of your financial period. And the consent has to be given by the Commissioner General to adopt a substituted accounting period. Businesses are registered with, represented by registered tax agents. You follow the tax agent lodgement programs. So the returns are not due by 28th of February, but there's a lodgement program that we have for all registered tax agents. For all other tax returns, salary wages, that's your employee's tax and all that, it's monthly payment and filing by the 7th day after the end of the month in which the payment was made. Goods and services tax, monthly, due by the filing and payment due date, 21st day after the end of the month in which the payment was made. And all other withholding taxes, as and when payment is made, the due date for filing and payment of tax by the 21st day after the end of the month. Again, same as all the other withholding taxes. Reporting and maintaining of business records, tax reporting and payment of tax, all reporting to be expressed in PNG Kina. However, the Commissioner General can give consent to report and pay in currency other than Kenya. Record keeping, all your records must be kept in English language, kept in PNG, and retained for over 7 years. Just the fiscal terms for the mining, oil, and gas. I didn't cover the other sectors, but we have the incentive booklet there available at our booth. The mining, oil, and gas is a ring-fenced or project basis of assessment that applies. So income earned from a resource project is assessed as if it is the only income, and expenditures incurred will always be offset against that project income. You cannot include other income outside of projects. Our PNG financial year, 12 months period ending 31st December. But like I've mentioned, if you want to opt for a different financial period, have to write to the Commissioner General. Corporate tax, 30% on your taxable income. For resource sector, there's no distinction between resident and non-resident companies. You can see additional profit tax, 30%, where your IRR exceeds 15%. Fiscal stability premium, 2% additional on top of your CIT, 30%. That's for guarantee of fiscal stability. The fiscal stability period, you can see there, if you're a mining and petroleum project, the period is the lesser of 20 years or the financing period. And for designated gas project, the period necessary to produce a foundation volume. Sorry, if I can just grab. Okay. For deductions and all that, allowable exploration, the deduction is calculated by dividing the balance of undeducted AEE by the remaining life of the project of 4, whichever is the lesser. And for allowable capital expenditure, for oil and gas operations, there's a distinction between short life and long life assets. So for long life, it's 10% straight line, while for short life assets, it's 25% or the remaining life of the project. Allowable expenditure is for mining operations, different treatment from oil and gas. You can see there, the calculation is calculated by dividing the undeducted balance by either the remaining life of the project or 4, similar to the short life AE. And ACE and AE deductions cannot create a tax loss. So in a project and all that, where you claim your deductions, where the deductions for ACE and AE is more than your taxable income, it's limited to your taxable income, cannot create a tax loss. Interest deduction limited to your debt equity ratio of 2:1. Foreign contractor withholding tax, 15%. Dividend withholding tax, 15%, and interest withholding tax, 15%. Rates for the dividend withholding tax and interest withholding tax, where there's a double tax treaty with PNG and the country, then the rates in the double tax treaty takes precedence over our domestic rates. And for foreign contractor, and all these withholding tax are final taxes, meaning you don't have to return them in your tax returns when you declare your income. Goods and services tax, 10% on the value of goods and services purchased domestically or on imports. We have a deferral scheme there, so if you don't want to pay at the, when your goods come in at the wharf and all that, you can apply for these, and as and when you lodge your GST return, you get to pay your GST, if there is GST payable. And we have the group registration that's available, allowed under the Act, GST Act. You can register all branches or companies as a group and submit only one GST returns, rather than lodging individual for your different companies and subsidiaries. But an application is required, and approval is granted by the Commissioner General. Incentive for the oil and gas operations. I think I mentioned earlier about the project basis of assessment, ring fencing, where you cannot get in other expenditure from outside of the project and claim it against your project income and all that. This is the relaxation of the ring fencing, bending the rules of ring fencing. Firstly, you can transfer undeducted exploration expenditure upon expiry, cancellation, or surrender of an exploration license. And the amount that you can transfer is the amount that you have incurred 20 years prior to the cancellation or expiry of that license. Also, you can pull exploration expenditures outside of the project area and claim a deduction against your project income. So the deduction is 25% of the pool, or such amount that would reduce taxable income by that 25%. And the undeducted A's and AE, whether it's a project, and the license, again, the license been canceled, expired, or surrender, and where you have another project, you can transfer that undeducted amount of AE and A's into your project and claim it against the project income. Okay, other incentives there, we have the fly-in, fly-out. So tax exemption on additional leap fares, provided conditions are satisfied. So currently, one leap fare is allowed, but should an exploration project companies want additional exemptions, they can apply for those exemptions. Goods and services tax, currently 0 rating for supplies of goods and services to resource companies. We also have the import exempt on goods other than cars for use solely in carrying out resource operations. And all exports are 0 rated from GST. And infrastructure tax credits. This scheme allows companies who are operating in the country to spend money on infrastructure that benefits the community and all that. So they can spend 0.75% of the accessible income, and that expenditure is treated as tax paid in advance. So when you file your tax returns, the IRC assess your income and does an assessment on your liability. The credits from this offsets against your tax. For stamp duties and all that, transfer of resource information, stamp duty charge limited to 10,000. For transfer of exploration licenses, concession rate of 10,000 is charged. If the transfer is for more than the historical cost of obtaining the information, resource information, duty is charged at 2% on the excess. And transfer of any development license, 2%. That's about the end. I didn't touch on any digital transformation and all that. Well, IRC, currently our systems are semi-automated, but I believe most of you have heard that recently the government has approved the purchase of two very important IC tools for us. That's the ITAS, which is the Integrated Tax Accounting System, as well as the GMS, which is GST Monitoring System. With ITAS, we hope to get it up and running by 2007. That will allow us to do online filing, online registration. You can also manage your tax account within the system, so you don't have to file paper returns now. You input the information and you get the assessment. With the GMS, that's a GST monitoring system that we have purchased. That tool will be attached to all the, where you go and to the shops, you get your receipt and all that, there's GST, those machines and all that will be attached to there at the cashier, and we get on-time information on how much GST is collected by each of these businesses. So I didn't touch on that because we have just purchased, but we hope that by 2007, IRC will be, we have our vision statement there to be a modern, robust, and efficient tax administration, and we hope to achieve that by 2007. Thank you, and we have a booth, please. If I didn't touch on any incentives on your business and all that, we have an incentive booklet available there, and I have other 5 IRC officers there to assist you with any questions you have on tax. Thank you very much.